Clay Patton on the Rural Radio Network. It's time for a weekly commodity wrap-up with Darrell Holaday as we explore what happened in the week's trade. And Darrell, I've said this before, I'm going to say it again, though. We almost need a new adjective for volatility as another round of bank concerns come in. Then on Friday, we get thrown for a complete loop in the grain complex with Russia, a little newspaper article talking about maybe stopping exports of grain, sending wheat sharply higher, pulling everything else up. In general, though, we even heard from Jerry Stoll there at Country Futures, just an exodus out of the commodity complex, a lot of liquidation to face. So, Darrell, what do you make of this week's trade?
Well, that's pretty well right. We had a lot going on. Of course, we knew the market or the industry was starting to also trying to get set for what the FOMC board or the Fed Reserve Board would say, or Jay Powell would say on Wednesday. We got past that. Don't think we learned a lot. The Fed's in a very difficult position, and we talked a lot about this. They helped get us in this bad position, but in reality, if you were dropped into that position right now, you wouldn't really know what to do either, because when you get to this position, there's not a real good answer. And as I've said before, we really don't need it. To me, we're not really talking about a soft landing anymore. We're just hoping that someday we will land, and because the damage is already occurring as we continue to see these increases in interest rates. We saw bank problems continuing to surface because they have balance sheet problems, because these bonds that they own, longer-term bonds, which aren't matched up very good with what their liabilities or deposits are really causing them havoc with their balance sheet, and it results in people wanting to pull their money out. And we saw this week was Credit Suisse. We even had some things at the end of the week about Deutsche Bank, and I think there's more there. And of course, the Fed's trying to reassure everyone they'll take care of this problem, but the bottom line is they're going up a quarter of a point. They're going to be a long ways to fight getting inflation solved, and yet I think they really are going to have to pause for a while, because they just got to keep these banks solvent to some extent, or keep their balance sheets in line. So that was what the outside market was dealing with, and what the commodities dealt with. That I think it created the most uncertainty. The biggest liquidation we saw in these commodity markets was over in the soybean complex, under a lot of pressure. That, along with a very massive harvest pressure in Brazil. They're at the peak. They're about 75-80% cut. Major reports of large supplies, filled up storage areas. Their basis levels continue to fall. When we ended the week, they were about $1.60 to $1.65 under U.S. Gulf on their offers at the port. So that's a sign of a very, very big crop. And this has pushed the soybean oil down to the low 50s area, which I don't think many of us thought we could get there. Soybean meal basically has lost $50 a ton in the last 2.5 weeks. Now, that market got way too high at one time. So I think sometimes when you spend too much time at higher levels trying to, if you will, ration supplies, you're going to go a little lower than you think when you go down. And I think that's what we saw as the washout this week in the soybean side complex. Now, corn held very well as we continue to see good export business. We got down to these levels 3 or 4 weeks ago. We knew we'd need to get down there and we'd find some business. Sure enough, China's bought lots of corn, I should say. And, they're going to probably push 4 million tons of corn during this buying spree out of U.S. corn. And our window for selling more corn in the world market versus South American corn really will be open for the next 30 days. After that, then you're going to start seeing that Brazilian corn crop, safrinha crop being offered. Now, we will watch the Brazilian weather and make sure it still holds up has been as good as it's been all year, but their critical stage is really in the next 30 to 60 days for safrinha crop. As you mentioned on the wheat side, then certainly was around the Black Sea region all week. First, really, when we started the week, we still had the questions about how long the corridor was going to be extended. There was some disagreement there, but then, as you said, there's comments that Russia may cap exports. By the end of the day on Friday, I don't think there's any indication they're going to stop exporting wheat, but they are going to try to keep the price from going below $275 a ton, which it did dip below there on some of the sales they've made. Throw that in with the moisture stretch in parts of hardwood, significant parts of the hardwood winter area in the United States, certainly a supportive factor as a whole, and really no sign that that's just going to break at any given time. We'd sure like to see it break. A lot of areas are better than they were a year ago, but there's a lot of areas are still are getting worse. And as we warm up and as it comes out of dormancy, we try to get more growth. You're certainly seeing those areas show up. On the week, May corn up 9 cents at $6.43. New crop December $5.60, down 1 on the week. May soybeans down 48 cents, $14.28. New crop November down 40 at $12.73. Those were all were significantly off the overnight or the Thursday night low, which pushed May beans clear down to 14.05. So they rallied about 23 cents off the low to end the week. May Kansas City wheat up 12.848. Crop July up 11.834. May crude oil up 3.03 on the week at 69.26. Very volatile session. Commodity got well above 70 at times, 71, 72 area. Dipped back as much as 66 even on Friday before coming back and closing with some strength and closing at 69.26. On the livestock side, the hogs continued to leak lower, substantially lower, especially through midweek. They did hold the midweek lows and did bounce a little bit late, but we just continue to see this product market move lower. It had a very weak tone until late in the week. There was a lot of concern about the cold storage report that was going to come out Thursday afternoon, how large these supplies of bellies and loins, hams would be. They weren't as bad. They were larger than they were definitely numbers that would concern you, but they weren't as bad as we thought going in. Some had feared. So I think we saw some bounce because of that on Friday. I think you've started to see the product firm up to some extent, but we just still continue to see hogs numbers come in at above expectations, about 1.5% to 2% above the expectations you would have based upon the December hog and pig report. Cattle somewhat mixed on the cash side, the lower in the south, but definitely steady, strong, even $1 higher in lots of areas, or maybe $1.50 stronger in some areas of the north. So that the disparity in the two markets, we're back to dealing with that again. That was 163 was really the price in the south. The north, you saw anywhere from 165, 166, 67 areas. So there was certainly a firmer market there. It was, again, just the leverage that you see in the cash market to the north was always much stronger than any you'll see in the south. Feeder cattle futures were weaker, but the cash values do continue to climb higher as that index continues to move a little bit higher. Matter of fact, about a $1.20 jump on Friday. So we're seeing the strength, starting to see some strength in those feeder auction barns. Once again, saw the big break off in the hogs midweek. They held there on Thursday again and then rallied a little bit on Friday, and the cattle futures moved up late in the week to show some weekly gains with the feeder cattle as a whole, kind of mixed to lower, depending on which contract you're looking at. April cattle 163 up 67 on the week. June cattle up 20 at 156.60. March feeders are up 80 cents at 189.60. 189.65, excuse me. May feeders, though, down 240 at 197.55. So pulling some of the premium out of these deferred cattle futures versus the front end of the market, which is not surprising, especially when you see a little bit of bump in the corn. April hogs at 77.17. We're down 280 on the week. June hogs, 91.42, down 190.
And that, again, is Darrell Holaday, Country Futures, Frankfort, Kansas. You can always learn more when you visit their website, countryfutures.com. That's countryfutures.com. Do remember, trading futures and options involve risk of loss. May not be suitable for all investors. Do consider these risks before investing.